this video we will be discussing 5 different targeting options which can be used in conjunction with the wealth crossover indicator from FoxEx. Since overall profitability in trading is heavily dependent on the risk-reward ratio, we will be looking at methods with a minimum of a 2-to-1 risk-reward. This way, even if 50% of your trades are lost, the results in terms of overall profitability will still be very positive for you, the trader. Please understand that losing trades are inevitable in trading, and it is therefore our responsibility as traders and as risk managers to trade in such a way that we are able to sustain the inevitable losses and still make a handsome profit. We did touch on this concept in the last video on stop loss placement when we looked at the relationship between win-loss ratio and the risk-reward ratio. When all said and done, trading is all about making money or making pips, and therefore setting the right targets or take profit levels is a vital ingredient of the trading recipe. Even if you have a great trading system and a wonderful indicator such as the wealth crossover, it's of very little use if you are unable to collect profits at the appropriate place and time. Even if you can pinpoint the optimum entries and the perfect stop loss positions, it's absolutely essential that you're able to set consistent take profit levels which provide you with the profitability that you are looking for, and which also help you to steer clear of the fear and greed which notoriously infects so many trade management decisions. Okay, so in this video we'll be looking at 5 different targeting options, all of which have positives and negatives and varying levels of consistency and compatibility with you, the trader. Option 1 is to set the target at the end of the adjusted wave of the wealth crossover indicator. Option 2 is to set the target at a predetermined amount or a percentage inside the end of the adjusted wave of the wealth crossover indicator. Option 3 is to go for a very simple and straightforward 2-to-1 target, and similarly option 4 is just to go for a very basic 3-to-1 target. Finally, option 5 is to trade without a take profit level and manage your open trades via the stop loss. When watching this video, you may resonate with a certain targeting option. As always, the key is to pick an option which fits and then stick with it. Okay, so let's take a look at these options in closer detail. Option 1 is to set the target at the end of the adjusted wave of the wealth crossover indicator. Since we already have a very good estimate of the turn, we simply place the target at the end of the wave, and that is all. It's as simple as that. However, please note that the exact location of the end of the wave will move as new candles form and the lines of the wealth crossover shift ever so slightly. That is why we have to adjust the wave and therefore the take profit level at the end of each new candle after it has formed. For example, the initial end of the wave may have been here when the lines of the wealth crossover first crossed. But as price unfolded, the crossover point will have inevitably moved ever so slightly, thus causing the midpoint of the wave to alter and also the end of the wave. Please note that it's not a big job to adjust the wave or the take profit level. We're talking about a process which literally takes a few seconds at the end of the formation of each new candle. It's very simple stuff, but very, very important to remember that you have to do it. So the positives of option 1 are as follows. First, you will leverage the full power of the wealth crossover indicator. Secondly, when targets are hit, you will squeeze almost every single available pip out of the markets. Thirdly, the process is mechanical, which removes the possibility of making decisions based on emotions. On the negative side, firstly, in some cases, price may not reach the very end of the wave and therefore targets may not be hit. Secondly, as mentioned already, once a trade is placed, you will be required to adjust the wave and therefore adjust the take profit level after each new candle finishes forming. This is true for all time frames. Option 2 is to set the take profit level at a predetermined percentage or amount inside the end of the wave. For example, here we can see the end of the wave, and we could have a rule in our trade management system which states that we always set our initial take profit level at, for example, 20% inside the end of the wave. So if the length of the entire wave is 1,000 pips, we would then place our take profit level 800 pips away from the start of the wave. The positives of this method are as follows. Number 1 is that we leverage the power and the consistency of the wealth crossover indicator. Number 2 is that this method is safer and more consistent than option 1, as targets will always be inside the end of the wave. Number 3, assuming that your entry and stop loss are positioned correctly and consistently, even if you lose 50% of your trades with this method, you will still make money as a trader. Number 4 is that when using this system, you can set bespoke parameters according to your appetite or aversion for risk. For example, you may want to set the take profit at 100 pips inside the end of the wave, or 200 pips, or 20%, or 30%, and so on. Finally, the last positive of this method is once again that the process is mechanical, which removes the possibility of making decisions based on emotions. The negatives of this option are as follows. Firstly, in some cases, you may miss some potential profits as price continues to move past your target towards the end of the wave. Secondly, once you place the trade, you will be required to adjust the wave and therefore the take profit level after each new candle forms. Option 3 is very simply to set a target of a 2-to-1 risk reward. So for example, if you're risking 100 pips on a trade, the target will be placed at 200 pips away from the entry. The positives of this method are as follows. Firstly, it is very simple and straightforward. Secondly, assuming that the entry and stop loss are positioned correctly and consistently, this method will produce a higher win ratio. Thirdly, again, assuming that your entry and stop loss are positioned correctly and consistently, even if you lose 50% of your trades, you will still make money with this method. Furthermore, it won't be necessary to move the wave or the take profit level according to the movement of price. And finally, once again, the process is mechanical, which removes the possibility of making decisions based on fluctuating emotions. On the negative side with this method, you will most likely miss some profits as price continues to move past your target towards the end of the wave. Secondly, you always have to ensure that a 2-to-1 risk reward trade is achievable and that the take profit level lies within the length of the wave created by the wealth crossover. Option 4 is identical to option 3, except that we are targeting a 3-to-1 risk reward ratio instead of a 2-to-1. The fifth and final option is to trade without a take profit on the charts and manage the trade via the stop loss. The positives of this method is that it saves time when placing a trade. It offers the trader the ability to manage the trade according to the dynamic movement of the markets. It offers a greater level of control to the trader, and it won't be necessary to move the take profit level according to the movement or the wave structure of the market. With this method, the negatives are as follows. It can invite you, the trader, to tinker with the stop loss too much and potentially suffocate the trade. It also lacks the mechanical structure of all other options and will therefore be subject to human emotion and differing interpretations of price. It will also require you, the trader, to look at the charts more often, and if you are unable to access your charts, price may potentially move into a large profit only to come back and stop you out. Please remember that when it comes to trade management, consistency is essential. All targeting methods will inevitably have varying degrees of efficiency and compatibility with you, the trader, and results will also vary according to the relationship between your entry and stop loss positions. Again, the idea is to choose a method which resonates with you and avoid jumping from one method to another, because this jumping around is a bad habit and is the hallmark of inconsistency and inexperience. This has been a short video on the methods of targeting when using the wealth crossover indicator from FoxEx.